Let's talk about what is really happening. How can crypto lose billions of dollars in a single week while Wall Street barely notices? Most people think Bitcoin is broken. They are wrong. But the reason isn't what you think. First, look at the safest money in the world. Imagine the safest investment on Earth suddenly starts paying you much more just to hold it. Where do you think big money goes? It leaves risky assets. Crypto is not broken. The whole financial system is just pulling money out of risky bets because safe money pays better right now. But as this cash leaves the system, it creates a silent mechanism that traps them.
Most people think they're being smart by buying the dip while everyone else is scared. They see negative ETF flows and think, oh, I'm getting a discount. But who is selling to them? Here is where almost everyone gets fooled. They expect a sudden, violent panic. They want to crash so they can buy the absolute bottom. We've all been there. But instead, we are in a slow grind. Big money isn't panicking. They are just slowly executing a liquidity drain because holding risky assets costs too much right now. In a fast crash, fear resets quickly. You get your adrenaline, you move on. But in a slow grind, prices just drift lower, day after day after day. Traders keep buying every small bounce, hoping the bottom is already in. This leads to repeated losses and total emotional exhaustion. So, stop expecting a quick, sharp recovery. Prepare your portfolio for a long, boring period where prices just slowly bleed. Keep your position sizes smaller. But retail traders, they just don't believe it's a slow grind. They think every red candle is a massive buying opportunity. Stepping blindly into a hidden trap.
Now that hidden trap, it isn't some smoky backroom conspiracy. It is just algorithmic cascades and forced liquidations. When you buy those blind dips, you aren't getting a bargain. You are stepping into a liquidity void. During these weak periods, these automated systems act like a giant vacuum, just amplifying every single sell order. It's not personal. It's just cold math. Falling prices trigger risk limits, which forces the systems to sell, which drops the price even further. If you are utilizing leverage right now, this loop will liquidate your margin before you can even blink. And this creates a grinding drain on your account. While you're sitting there waiting for a bounce that just never comes, the algorithms are systematically extracting your capital. So, your immediate action, cut your leverage right now. Step aside and let these automated strategies finish their dirty work. But if the algorithms are just amplifying the crypto sell-off, why hasn't this panic spread to the stock market?
Exactly. Here is the institutional reality. Bitcoin is bleeding, but the NASDAQ, it barely moved. If this were 2022, both would be crashing together. So why didn't they? Now we can finally answer the title of this video. The institutional trap isn't that institutions are secretly dumping on you, it's that retail watches the price of Bitcoin first, while institutions watch the cost of money first. By the time retail reacts to the red candles, institutions have already adjusted to the bond market. Here is the exact question I would have asked 3 days ago, before those red candles even started. Did the cost of money change before Bitcoin moved? If the answer was yes, that was your warning. You don't need to predict the future. You just need to check the cost of money first. If safe money starts paying more, risky assets will eventually bleed. At Axiom, we have one rule: follow the transmission. Crypto is one of the first major risk assets to react to these rate changes. But if the fear isn't transmitting to stocks and bonds, you are not watching a financial crisis. You are watching a localized liquidity drain.
But if the broader foundation is safe, what exactly should you do with your crypto bags right now?
You execute a strict survival mandate right now, and it requires a completely different rule for every single type of coin, because one size fits all, that will wipe you out during a slow grind. Holding oversized positions in the wrong assets can permanently damage your capital. So you must shrink your trades to a tiny fraction of your normal size. Here is your exact execution plan. Protect Bitcoin. Hold spot coins. Use zero leverage. Simplify major alts. Flatten your derivative risk. Just hold spot. Shrink high beta. Keep position sizes tiny. Limit speculation. Exit those meme coin positions unless they fit a strict predefined risk budget. Flatten your risk. Clear your margin debt. Keep your execution strict. But you cannot stay defensive forever. When do you actually get to buy again?
You wait for the all-clear signal. Most people try to guess the exact bottom. And honestly, that is exactly how you lose money. Institutions do not guess. They wait for confirmation. Catching the exact bottom, that's just luck. Catching the confirmed trend, that is how you build actual wealth. If you buy too early, you just become someone else's exit liquidity. But if you wait for the exact right signals, you buy safely. So here's the final rule. At Axiom, we don't consider the trend confirmed until we see two things: short-term interest rates actually drop, and confirmed positive institutional inflows for 3 consecutive sessions. Do not guess the bottom. Wait for 3 days of clear, undeniable proof that the big money is flowing back in. But how do you actually remember all of this when the market starts pumping again and the FOMO kicks in?
You lock it in with one single clear mental model. I am not here to predict the exact price of Bitcoin. I am here to teach you how institutions decide when the market is lying to them. Transmission beats headlines. If the fear is not spreading into stocks, bonds, or credit, the crisis is not real. You are just watching a localized liquidity problem. Stop trying to be a hero. Cut your risk, cut your leverage, shrink your speculative bets, and just sit on your hands until the big money stops running away. Capital survives by waiting. Institutions follow confirmation. Retail follows emotion. Protect your capital, follow the transmission, and be the institution.
Now that you know how institutions think, you need to see what they see. Inside Axiom Intelligence, we publish the exact signals, entries, and risk parameters every single day. Right now, you can start with a 3-day trial for just $5. See the real-time transmission before you commit. The link is in the description. If this briefing protected your capital today, do me a favor, hit like, subscribe, and share this with one friend who's still trying to catch a falling knife. Protect your capital, follow the transmission, be the institution. We'll see you on the inside.